Hello and welcome to this very special pre-budget conversation on money control. I'm Mahalakshmi and I have with me Saugata Gupta, Managing Director and CEO of consumer company Marico. Thank you so much, Saugata, for joining me today. So first of all, last year was a mixed bag for consumer companies, both in terms of margins and volumes. There were so many pressure points. How do you see the demand environment going forward into the next few quarters?
So if you look at it, I think as we came out of COVID, obviously the entire inflation push led by the Ukraine war happened. And as a consequence of it, I think especially in rural and especially in mass categories, we had a scenario of slightly softer consumption. And the primary reason for it is because of the fact that whenever there is high food inflation, consumers tend to titrate or downgrade in FMCG. And especially in rural, we were witnessing that. I think the worst of inflation is over. And I must say that India has coped with it far better than a lot of countries in the world. I think we are standing out. And I think things will improve from now on. Although I must say that the rural consumption situation is still soft, but we see some improvement happening. At the same time, I believe that if we look at urban or if we look at some of the categories like food and all, the situation is still good. So overall, I would say the things will only improve, but the improvement will be gradual from now on.
So you're saying gradual improvement for rural, or you're saying in general gradual improvement in demand.
So I think urban demand, I think, is okay. I don't see significant issues of it. I think as far as rural is concerned, while it is still soft, I think there will be a steady improvement. Obviously, it will take time, but I am pretty confident that you will be able to see a steady improvement in demand as we move into subsequent the next 3-4 quarters.
You will see a steady improvement next 3-4 quarters. That's your belief.
Yes, I think so.
Okay. One of the trends we saw last year was this, whole issue of shrinkflation, where consumer companies were sort of, reducing grammage and stuff like that. And on the consumer side, you saw a lot of down trading because things were getting expensive. So obviously, the substitution effect takes place, and replace your premium goods with lower value items. Do you see any change in those kind of trends? Do you see, for example, up trading starting to emerge in the consumer segment?
See, obviously, people either premiumize or upgrade from a smaller brand to larger brands because they offer differentiated value proposition, or these brands are aspirational. Whenever there is high inflation, especially in mass items of consumption, which people can't titrate, there is a bit of a downtrading that happens. Obviously, in a lot of cases, since price points are critical, companies would have taken either a volume drop or which is the MLH, or a grammage drop, which is the shrinkflation. I think as the situation has significantly improved in the last quarter, although obviously people were sitting on higher cost raw material stocks, but both in as crude has stabilized, as vegetable oil stabilized, and other derivatives of that has stabilized. I think either there will be price cuts, some price cuts, or companies will go back in terms of giving that additional value in terms of additional grammage or MLH, and gradually this will come out. So I see this happening from starting this quarter onwards, I think. And therefore, as I said, that unless any other black swan events occur, I think the worst of inflation is over and things will be far more comfortable.
So what I meant to ask is, for example, Shagata, if you look at the past trend, I mean, last so many years, every time the price trajectory moves up, there is great resistance on part of companies, because customers also kind of get used to a different level or a different price point. So obviously, companies are also interested in keeping those margins to the extent possible. So do you see that trend really reversing? Are companies really going into price cuts?
So it depends. See, I'll tell you what I think. We have to continuously optimize between volumes and margins, and
Right.
obviously, when there is significant inflation, you will not, I don't think everybody has been able to pass the entire cost, because at the end of the day,
Right.
in any emerging market, the primary objective is to protect volumes and market share, because it's far more difficult to get back a lapsed consumer. It's much more easier to get back margins. Also, I think
Correct.
because of COVID and the impact that had in Ukraine, I think large companies are far more geared for, I would say, black swan events and cost management. A lot of structural cost management is put in place. And therefore, if you
Hmm.
see a lot of, I think the margin, you will now start seeing sequential margin improvement that will happen. At the same time, I
Hmm.
think people will be mindful of the fact that we need to have a volume and market share protection. So you have to continuously balance that. In certain categories, it's easier. Certain categories, obviously, you might not get back that. It will take some time to get back that original margin. But I think it happens because, see, one of the advantages of scale players is that there are structural cost management practices which are institutionalized in the organizations.
Yeah. Sure. In fact, that is one of the trends that has also come across very clearly post COVID. That larger companies tend to sort of consolidate market share, while the smaller fringe players sort of become weaker and weaker. Not only because of cost of funding, there are so many other factors that doesn't give them the level of resilience that larger companies have. Do you see that a play going forward, and do you see a lot of consolidation in this space as we go into next 1 or 2 years, where most of the pressure points perhaps are going to be behind and companies are more confident about the future?
So if you look at in the last, post the GST regime, which has been now the compliance is getting improving year after year, plus COVID, I think we have seen a situation of strong getting stronger and the weak getting weaker. And
Right.
I believe that consolidation has continues to happen. Also, we are seeing significant transformation in the distribution space. Okay, uh, and therefore this consolidation that I think will continue. I still believe that direct distribution is a source of competitive advantage and remains an entry barrier for large players. Although obviously in the digital space,
Yeah.
nimble-footed D2C brands have been able to garner market share. Having said that, even
Right.
there, I think there is far more, I would say, urgency to drive profitable growth. And therefore, the kind
Right.
of madness we saw on spends in the last 2 years, we are seeing far more rational level of spends. So I think, so therefore, for the large players, whether it's in the digital space or in the mass space, if execution continues to be good and we follow a good rate of innovation and continuously innovate, I think you will see consolidation. The other interesting thing in India is, if you look at even today, there are certain areas where the slowdown is slightly more rampant. You're seeing rural and you're seeing in home and personal care. If you look at foods, where where the canvas is far more broader, because packaged foods
Hmm.
penetration in India is very low. And I think the biggest, if you saw the kind of impetus that happened during COVID, where there was a lot of in-home consumption of food, packaged foods. Also, there's an impetus towards far more healthy eating. I think the headroom for growth in foods is tremendous, and I believe that companies which have a significant portfolio in foods or food companies are
Yeah.
going to exhibit in the near term far bigger, higher growth rates than many HPC companies.
Sure, sure. So does it come across as a concern to you that foods tend to be typically a very low margin business, and it's sort of most companies, especially if you're entrenched in home and personal care and used to higher levels of gross margins, becomes very difficult to sort of reconcile to lower margins in foods. Do you see larger companies really scaling up in a big way in that area?
So I think one has to look at two things. Yes, food has a relatively lower gross margin than personal care. At the same time, I think food, it is easier to get scale. So if you look, and also the A&P required in foods, I think is perhaps lower than personal care. So if you get scale quickly at a net contribution level after 2 3 years, I think it neutralizes out. The second thing is, obviously, for a company like us, I think while we are growing accelerated in food, it's extremely important that we also start premiumizing our personal care portfolio, so that the blended margin of our new products continues to be the same as what we have in our current portfolio. And
Fair enough.
so at the same time, I think in foods also, if you look at our strategy, we have consciously avoided commodities. So whatever we are launching is, I think, margin accretive with respect to Saffola as a brand is concerned. And
Right.
secondly, I think given the fact that we are just expanding the total addressable market using leveraging the existing brand, we are also going to get economies of scale as far as A&P is concerned. So
Sure.
if you get all the three right, I think over a 2-3 year period, I don't think margin will be a concern.
Sure. Sure. The other thing you mentioned is this digital space, and totally agreed that those, at least companies in that universe, have to become far more conscious of the fact that if not profitable, the path to profitability should at least be established and in a sort of a small, in a reasonable time period. Again, there now, the funding environment has changed quite substantially between last year and this year. There also, you're sort of seeing a lot of companies either scale back or difficulty in funding, powering the brands that they did so far with absolutely unscrupulous spending. All of that is now hitting a speed block. uh, do you see opportunities there? I mean, do you see large M&As happening between traditional companies for whom, with last year's valuations was completely unthinkable, because for a traditional company which delivers 40-50% ROE to go into these companies where the visibility is so low becomes very challenging. Do you see that sort of changing in any significant way this year?
So I think two things are going to happen. There are certain companies with a strong differentiated proposition which have significantly, I would say, sound economies of scale. They will continue to get funding. I don't see a problem in that. I think the issue for a lot of digital brands is that after hitting a certain scale, I mean, it could be, say, 80 crores, 100 crores. And when I talk about this money, this one, I'm not talking GMV, but net realization.
Yeah.
I think it's important to do the crossover to,
Hmm.
general trade.
Omni-channel approach. Hmm.
Yeah. Now, there, what happens is the competitive advantage which they have, which is their biggest competency, which is velocity of innovation, quality of digital marketing, understanding consumer, that landscape changes. Okay. And
Correct.
therefore, I would say that I think having a strategic investor plays they can play a good role in doing the next level of scale up. And
Sure.
if you
Sure.
look at it, there are obviously some players who have crossed 100 crores who have made that journey into this one. Having said that, I have a different view on foods. I think unless you are in the slightly high margin space like nutraceuticals or slightly more healthy foods, given
Yeah.
the average selling price and the margins, food doing a only digital business might not suffice. Food has a far better chance of winning and profitable scale up when you move into general trade or into modern trade omni-channel far earlier. So I think what
Right.
will happen is this, that in the digital space, I think there's far more sanity in terms of the
Hmm.
investments, and therefore good brands will continue to prosper. And therefore, what
Sure.
it will do is it will actually now differentiate between something which has inherent good value and something which doesn't has not created value.
Sure. 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 So the other question is something we spoke about, the shrinkflation bit, and I think this word got a lot of media coverage all of last year on social media and traditional media, everything. But this has been a phenomena that probably has been happening for last 5-7 years, ever since the you could have non-uniform grammage packs, and that's exactly the point from where some kind of compromise on volume has happened at the cost of margins. I mean, if you look at the entire industry, margins have grown much, much faster, while you would have seen, probably 5-7% volume growth at best. Has that now, that play on margins really run its course? Do you think from here it will have to be volume growth which will have to trigger a power earnings growth?
So I think two things. One, on volume, you must also realize that a significant number of categories obviously have high penetration, and therefore, see, there are three drivers of growth. One is unbranded to branded, second is small brands to large brands, and third is premiumization.
Right.
Now, therefore, whenever there is high levels of category penetration, obviously either it has to be through premiumization or increased consumption. And obviously, I mean, while the population growth is still there, I think therefore premiumization has been the driver. Now, whenever there has been volatility as far as inflation is concerned, premiumization has suffered. Now, the problem is that, having said that, the unbranded to branded or small brands to large brands, which has been a significant driver of growth for all the categories, now their price points become very important. And one is, it's a psychological thing. The fact that when you are stuck on a 10 rupee price point,
Yeah.
to move to a 12 also takes huge guts. Some of the
Correct.
people
Correct.
have
Correct.
moved. And let me tell you, it
Yes.
doesn't change. Like, I'll give you an example. I think in one of our categories, we moved from a 15 to 16 rupee price point. Now, it took us some time, but it's okay. Nothing has happened in that. So I think, having said that, I think when it is a 1, 2, and 3, it becomes far more difficult,
Right.
to move from that 1 to. So I
Yeah,
think
for
that has been
candies,
the,
chocolates, and stuff like that. I mean, to
yeah.
vacate a 1 rupee or a 5 rupee or a 10 rupee is like nightmare.
Yeah, so I think that is the issue in India outlay, given the fact that a lot of people are daily wage earners there. They believe in, the outlay becomes an important thing. At the same time, they are aspirational for brands, and therefore that becomes a difficult part. Now, as far as margin is concerned, I think with scale and I think with the kind of efficiency, I think large companies have now institutionalized this kind of a margin improvement. If you look at, say, let's take a case of a shampoo sachet. At the end of the day, it has stayed at $1 or $2 for a huge amount of time. It's not that
Yeah.
margins have collapsed. Number two, I think what is happening is, with far more analytics, investment in analytics, data science, I think we now have an automation far more view on the A&P and the sales spends in terms of effectiveness of that. Today, if you look at the way we and not just us, I think a lot of FMCG companies being able to manage effectiveness of sales and marketing spends using data science and analytics, that also I think has given that kind of a this one to ensure that the uh, margin is not compromised. Having said that, you are right that at the end of the day, I think companies who have been greedy for short-term margins while compromising consumer value over the short term, it doesn't impact. In the long term, it impacts. And a lot of companies we have seen in the last 4 5 years have changed course to move back, focus on driving volume growth and driving consumer
Right.
response.
Sure, sure, sure. Sorry, this was all to just set the stage in terms of where the industry is, how do we see demand, what are the pain points, challenges, and all of that. So now coming to the main issue of the budget. I mean, what is your expectation from the budget, from a consumer company's perspective? I guess two things are important. One is the demand side. I mean, do you need any external triggers for demand to go up? Like you talked about rural, which has been kind of soft over the last few quarters. What is your expectation?
So, if you look at it, as I said, firstly, I think the government has managed the economic situation very well. And if you look at it, we are standing out in terms of, even after, whether it was COVID, whether it's Ukraine, India is clearly a standout nation. Uh,
Yeah,
if you look at this year, I think the two things going good. One is obviously the inflation will be controlled, because if I look at the India's import bill, whether it's crude or vegetable oils, I think it will be certainly lower than the last fiscal, and therefore that will help. Similarly, uh, I think we have done well during COVID to ensure that we continue to support the poor in terms of free food grains. That has got converted into free PDS, which means they continue to get support. And I think it's a unique thing, because that protects a significant portion of the population from food inflation. And that's a
yeah,
great thing the government has done. Having said that, I think the subsidy bill will go down with the tweak
correct.
that has from in December. So with these two positive things, I think they should be. I think they would be able to, while managing the fiscal deficit and controlling inflation, more investment behind infrastructure. I think rural productivity. The PLI scheme, I think, if continued to be executed well, will continue to provide employment, and this one creates a manufacturing-led growth. Creates, I think, and India also having a fact that it has a significant domestic consumption market also creates great demand. I would think that the fact that with GST compliance and the fact that the tax collection continues to remain buoyant, it may may require at least in for the middle class, salaried income, some kind of in terms of the income slab tweaking at the bottom, at the entry point, such that it gives more income in the hands of this one. But I think government should continue to invest behind, I think, infrastructure, PLI, and I think driving consumption. And one of the things I really admire in this government is that it has most of the decisions they have taken are for the long term. Sometimes budgets compromise the long term for the short term,
Right,
but I
right.
think this time I think they have taken a balanced view, and I think the situation is slightly, and I would say significantly better than what it was 10, 12 months ago in terms of whether it's an import bill or
Yeah.
so a fiscal deficit. So I would think that this continuity is important. And uh, I believe most of the steps that have been taken are in the right direction. I think we have done able to do large scale execution and investment infrastructure. So I think I am reasonably optimistic about the situation.
Fair enough. From again, from the consumer company's point of view, is there any specific ask? Is there anything specific that you would wish the finance minister did to trigger or augment growth? Of course, one of the things that everybody asks for, especially consumer companies, is cut taxes and put more money in the hands of the public so they spend more and buy more of your goods. But that apart, anything else that is that any other change that you would wish for?
So I believe that, as I said, that I think as long as inflation is under control, and obviously, I think some benefit given at the at the entry level, because at the end of the day, as a salaried taxpayers, if it is in terms of the it is given, I believe it's good. To me, my belief is, as long as fundamental work happens in terms of investment behind infrastructure, creating more employment, leading to more disposable income, that's a far better way of creating sustainable growth than through subsidies and just putting money at the hands, because that's a much more short term kind of approach. So I would say that if the overall inflation is under control and there is some little bit given in the what I call the smaller taxpayers, I think that's a fair enough ask. I don't think we should ask more given the degrees of
Sure.
freedom the government has.
Correct, correct. Okay, one area, Saugata, which has been sort of a mixed bag, if I may say so, is the SME segment. I mean, SME segment has really gone through a lot of stress, especially post GST and again post pandemic. How do you see that getting resolved? Like, most of your vendor companies also, a lot of them might have gone through a lot of stress because push comes to a shove, large companies end up squeezing the last penny out of the vendors, and that is the feedback one gets from them. I'm not saying specifically with respect to Marico, but in general, larger companies tend to have greater bargaining power and the smaller ones tend to get weakened. uh, how do you think this whole issue can be resolved, and how can that segment really be revitalized? Would you think that it will be necessary for the government to do something there, or should we just let market resolve this problem on its own? If you're competitive, you have to fend for yourself, you have to fight for yourself, you can't be on the crutches, on support system.
So I would say it's both. I believe if the overall demand situation continues to improve and the economic growth continues to be stable, yes, they were significantly impacted by the pandemic. Uh, I think the government has taken some steps. I would say that, I mean, yes, the government should look into it. At the same time, I believe it shouldn't be subsidies, but how do you enhance help in terms of productivity and access to capital. As long that is there, I think things will improve. But I think as far as even SMEs is concerned, I think the worst is over for them. Yes. And now regarding GST, I think GST compliance is something which is a must. So
Yeah,
saying that because of in the past it was non-compliant, you can't have a business model based on non-compliance.
correct,
So
correct.
I would think on the GST part, it is important to be compliant. Having said that, I think there are other ways. I think whether it's access to favorable rates of capital and other things, I think those are the kind of things the government can do to help the sector.
Sure. That's all from me, Saugata. Thank you so much. Such a pleasure talking to you.
Thank you. Okay, bye bye. Take care.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Money Control. Log on to www.moneycontrol.com for more.